Have you ever looked at the stock market and just felt completely lost? Like it's this incredibly complex machine that's impossible to figure out? Well, what if I told you it's actually a lot like something you already understand, a simple train journey? Today, we're going to use that very idea to unlock some of the market's biggest secrets. So let's start with a really simple question. Just think about it for a second. Would you ever run alongside a speeding train and try to jump on board? No way, right? It's ridiculously dangerous. And yet, this is exactly how so many people treat the stock market. This one idea is the key to everything we're about to talk about. You know, every successful journey has to start somewhere safe, right? It starts at the station. In trading, that station is your planned entry point, what the pros call the buy zone. It's the huge difference between making a calm, calculated decision and just taking a wild, risky leap of faith.
This slide just captures the two approaches perfectly. On one side, you have the smart way. You're boarding a stopped train. You've been patient, you waited at your station, your planned entry point, and you get on calmly. And the other side? That's you chasing a running train, buying a stock out of pure FOMO because it's already taking off. One is a strategy. The other is basically a gamble.
And this illustrates the risk so well. If you go chasing that running train and you barely manage to hop on, you might find that the very next stop, even a tiny dip in the price, is where you get thrown right back off. A bad entry means your potential for profit is already tiny, and any small move against you forces you out of the trade. So what happens when you make a mistake? Because let's be real, it happens to everyone. What if you realize you've hopped on a train that's going in the completely wrong direction? In real life, you'd get off at the next stop, no question. In trading, that same exact idea is one of your most important survival tools. Honestly, this is the best, most intuitive definition of a stop loss I've ever seen. Forget all the technical jargon. A stop loss is simply your decision to get off the wrong train the second you realize you made a mistake. It's not about admitting you failed, it's about preventing a small mistake from turning into a total disaster down the line. And here's the choice you have to make. Laid out, plain and simple. Get off immediately, and you take a small, manageable loss. But if you stay on that train, just hoping it'll magically turn around, well, you're on your way to what's brilliantly called a top-class loss. What a great phrase, right? It perfectly describes how a small, correctable mistake turns into a huge financial headache. Okay, so you know which station to get on at, and you know when to get off if you're on the wrong train. But what kind of train should you even be on in the first place? I mean, you can't just board a super-fast bullet train with a local commuter ticket. In the market, your ticket is your capital and your patience, and that ticket determines which strategy is the right one for you. This chart just lays it all out so clearly. If you have low capital but you've got a lot of patience, you're on the push-pull train. Think of this as slow, steady, long-term investing. If you've got a bit more money in a shorter time frame, maybe you can board the super-fast train, kind of like a swing trader looking for quicker profits. And if you have high capital and very little time, then you might be looking at the bullet train. Now, this bullet train is a great metaphor for something like options trading. It's high speed, it's high risk. And there's a fantastic point being made here. To ride this train, you need a very good ticket, meaning you need serious capital. Why? Because with options, time is literally money. If you have a large amount of capital, you can handle it if the options value decays over time and still come out ahead. That's a luxury someone with a cheaper ticket just doesn't have. So, after this whole journey, through stations, mistaken trains, and different classes of tickets, what's the big lesson here? Let's bring it all home and sum up the key rules for navigating the market. It really all boils down to 3 simple but incredibly powerful rules for your journey. First, find your station and be patient. Never, ever chase a running train. Second, if you realize you're on the wrong track, get off immediately. Keep your losses small. And third, be honest about the ticket you're holding. Choose a strategy that actually fits your capital and your personality. And that leaves us with one final thought. As you look at the market and you plan your next move, don't just get lost in the numbers and the charts. Ask yourself this: am I waiting patiently at the right station? Do I know exactly where I'm getting off if I'm wrong? And most importantly, am I holding the right ticket for the train I'm about to board?